Happy New Year, everybody. I'm Dale Pinkert, and welcome to TradeGate Hub's video live stream. Looking forward to having a great year with everyone, and it's important that you believe it going into the year and declare it, not just think it. So everybody with me, I'm going to have a great year in 2022. Okay, so that energy's out there. So a pretty active day for bank holidays in the US and Europe, I believe. I don't think people were looking for the kind of action that we had today. I want to start a little big picture with you guys, and this is Euro Pound. All right, so while Euro Pound was heading down, the Euro underperformed cable, and I believe we're building a turning point. It may have happened on Friday. This was Friday, and the turn in the Euro Pound now makes cable the preferred short, Euro the preferred long. So long term, I think this is going to be a buy, and you're going to want to be long Euros. It's just not yet. Still looking for one more high in the Dixie, one more low in the metals. The metals are getting crushed today. The dollar is being bid after taking out some stops late last week, but the pound is weaker than cable. Pound is weaker than euro. Here's just a look at the cable. Peaked around 135.5. We're getting hit pretty good. I think you could sell rallies in cable now back to 135.10 or so. Actually, last week we drew a line in the sand for a bear market target. I think I did it on the weekly. Here we go. So this is what I'm looking for. We'll blow out the big round number at 130. So looking at this possibility in the coming weeks, I just want to review what we talked about last week on the monthly chart in euro. Okay, and I talked about this inside month that we had, and I felt we were going to finish, that's no big call, as an inside month. And I talked about the most bullish thing the euro could do. Now, keep in mind, this is a monthly chart, not a 15-minute time frame. So the most bullish thing that we could do is take out last month's low and the low of the move, perhaps going into mid-month. It doesn't matter when it happens, only that it does. And here's an area that I believe is going to be a buy point. Of course, you're always going to have stops. I mean, if you're buying it at 110.50, maybe you risk 150 pips for a turn, looking for a turn in the euro. But what we would want is, once we're down here, is a reversal in the euro to then take out last month's high. And I'm not sure we'd have enough juice to get through this high. That's all the way up at 116, but it's possible. Confirmation wise, back over 115 is going to be important, but one step at a time. And so far, the forecast made last week that looking for a monthly reversal, first we have to get new lows in euro for that to happen, and that's at 110.50. Okay, so everyone keep that in mind. My preferred short while we're heading down and when we're heading up is going to be cable. So cable is what I'd be looking for, something short term to ride this market down. You're already looking at 134 happening. So you're not late if you didn't get short before New Year's. Okay, so a lot of people aren't even in today, but having a pretty big move in currencies, which is being dwarfed by what's happening in metals. So the longer term calls that I was making for 98 in the Dixie and 129 in cable and 110.50 in euro still look to be viable, even though we had a little more of a push than I was expecting in cable. I was talking 135 down here. So, here we are. So this 135, 520 level, I'll be attempting shorts with stops over the high. We'll see how things set up when the rest of the world gets back and the banks are open tomorrow. Wanted to talk about Aussie, which I was bearish last week from the 72.60 level. There's the Aussie. Aussie getting crushed. It's also, very commodity driven currency. So, the sale was at 72.60 right in here. And we had marginal new highs to 70. But again, my thesis was, and not based upon just, trader instinct or intuition, that the Aussie was going to make a new low. And I'm thinking we take out the big round number under 70. So I like the short side of Aussie. It kind of ties in with what's happening in the precious metal arena. Gold getting hammered. I talked about being bearish last week. See, they almost look identical, don't they? There's your gold chart and there's your Aussie, and they're both dailies. So they're correlated pretty tightly. So if I'm looking for a new low in Aussie, in fact, I could probably time a gold low off when I think Aussie is bottoming. But anyway, we have a pretty negative day happening in gold. I still think over the coming, this is a daily, over the next couple of weeks, we could trade back down here towards 1730. That's something I talked about last week, but we had one more recovery. This looks a lot like this, and it could complete. And maybe by the end of January, gold is done. Maybe by the end of the week. I'm not WD Gann. He predicted time. Best I could do is have speed lines and guess when it may tackle this speed line. But I can't predict the time and the day like WD was able to do. So Aussie and gold looking negative, and that follows suit with silver, right? Silver is really getting hammered pretty hard. Gold silver ratio. So this double bottom in silver, I still think is going to be taken out. See this? It's the same low here as it was here. Look at this 200-day moving average. It contained the silver. Looks pretty bad today. I think that we're going to wash to between $20.50 and $19 if it gets extreme. So I'll be watching the miners into those price levels for potential buying opportunities in miners. If you're an aggressive trader, you could be short any of these instruments that I talked about with stops over today's highs. So unless you got in early, it's a pretty big risk. It's 60 cents, but if you're looking for $3 in silver, it's reasonable. Even in gold, if you didn't sell the high today, you could have stops in over the high at 1830 and risk $25 for the potential $70-80 move to the downside. So what I was looking for last year is starting to manifest on my screen. Think that this is going to be a capitulation move in the gold and the silver, and one more push. Keeping alert for this monthly reversal in euro, which will translate into a major top in the dollar. I want to go to some outside markets right now to show you what's happening in the energy complex, which I think is important. So I'm only talking about important things here. You know why? Because money comes and goes and time is gone forever. So make it count. So here we go. I wanted to take you to the WTI. It's important if we're topping up here in crude to pay attention to this, because crude was doing this for a while at the last high before we had this ambush after Thanksgiving for a $10 decline. As a technician, this so far looks like just a simple corrective pattern here. And you have S&Ps making new highs without energy. Back here, they were both making new highs. Here, it's clear that the S&Ps have made new highs over 47.40 They're still running, but crude is putting in a lower high. The whole street is bullish for their best trades for 2022 are energy related, oil related. I still think they're early. So maybe this spring, after we, complete some washouts, that may be the time, but I still contend that we're not on our way to new highs in crude, that there could be another wave similar to this. This is where I would back up the tanker. I was going to say, back up the truck, but it's oil. So I'm going to need a tanker to back it up. So, in the low 50s, I'm pretty interested in any oil asset. So, but not up here. Also wanted to show you, which is going to be an important piece of the puzzle this year for the precious metal bottom. And I think that the thesis is going to be tested out here with silver heading lower, gold heading lower. Like, for example, today, silver is twice as weak as gold. So the gold silver ratio is heading back up. I talked about this in videos over the last few weeks that when silver makes new lows, you don't want to see 82 taken out. You want to see a failing rally in the gold silver ratio. So we'll see. I'm not going to not take the trade if we make a new high in the XAU because I don't believe we'd have momentum confirmation. But ideally, for the silver to make a new low and the gold silver ratio not make a new high would be more constructive for the precious metals. So again, keep an eye on this euro pound. I think it's either has bottomed or will bottom. The dollar index coming back strongly. As I said, let's get it over with and take out this double top. I believe Ellioticians, which I'm not, would call this a corrective wave 4. If you're in wave 4, it implies one more move to the upside for a 5, a terminal thrust. And that's when the worm will turn for the dollar. I'm guessing, okay, guessing around 97.60, 98.10. We could complete this move in a matter of days or weeks. Depends the way the market's moving today. Everything feels like it's moving faster. Just be careful here in the S&Ps. Same line in the sand. As long as we're over this double top at 47.50, it's okay. I still think that perhaps with the dollar, the S&Ps will make one more charge towards the upper 48s, maybe 49. It's going to be interesting to see where NASDAQ's at. NASDAQ has not made a new high yet. It came close, but it didn't. S&P's trade towards that 4,900. We should get a new high in NASDAQ, but look at where the RSI is. Okay. This is glaring divergence. I don't need to put my cursor here to see that it's lower. Even Mr. Magoo, I know I'm dating myself, but even Mr. Magoo could see the divergence here with his Coke bottle glasses. Okay, so we're diverging. We weren't diverging as I'd say glaringly up here. The RSI was over 70, but it was a divergence. But these highs right here, and even a continued march, I don't know what it would take to get NASDAQ back over 70. Would probably have to be 17,000 or so. So, that's something else I'm looking for. So a lot of turning points can happen. A lot of people believe as goes January, so goes the rest of the year. Everyone's going to be looking for the January effect. So bring it on. And just, something to look at here. Check out SQQQ. It could be a good spec. Looking at how glaring the divergence is. This is a triple bear ETF on the Qs. And I have to have something on. So, if we get down here, I'm going to do it. And my reason is not because of the glaring divergence that we have happening on multiple time frames, but just because of the commercials of people going on TV, and they'll jump into a football scene and the team will look at this person and they'll say, oh no, I'm not on the team. I invest in QQQ. So who's seen that commercial? Anyone in the house? They run them all the time. QQQ. It's so, you're so, I don't know, hip and smart and wise to be investing in QQQ. You were, but I don't know. Once an ETF starts hitting hitting the major airwaves, that's actually contrarian type trade. There's just one more chart I want to show everyone in crypto here. Okay, so here we go. This is a potential head and shoulders top in crypto, I think, and this will lead risk off and probably a dollar sell off too. But if you look at this red neckline right here on Bitcoin, it's not a breakdown till it takes out, I'd say 43 on a closing basis. But this is a $25,000 formation. And actually it measures to 20,000, 18,000. You know what was at 18,000 in Bitcoin? It was a prior high. Prior blow off high was up here. Let me go, maybe I have to go to a monthly. Everyone remember 18,000? And that's when they started putting out crypto futures and stuff. And back then I go, boy, those guys on the floor licking their chops to short that one. And they were successful. So this was it. We went to 18,000. And this formation, we are diverging. The only bullish thing I could see is perhaps maybe a third drive coming. But I'd be careful. It's very possible that we get a big break in crypto. It could be a sign of risk off to come. Normally you'd think about it the other way. If the market equity sold off, people might liquidate their crypto. I think that if Bitcoin sells off, people are going to, people that buy crypto, and there are lots of people that made fortunes, when they're not in crypto, what they do. And Mike and I were talking about Amazon, which is up today. And these are now called flight to safety stocks, okay? So when they come out of their, instead of going to cash and bonds like, dinosaurs like me were taught to do to avoid risk, these are now their safety trades. It's, it's Amazon, and it's Tesla having a great day, and it's Netflix, right? So actually, I think a Bitcoin break could take down Microsoft. Looks like it's rolling over. I wouldn't mind seeing another high. Apple's, one of the best looking charts here, but it's not going to confirm. It's almost at new highs right here. So just some things to think about. I actually think that a sell-off this time in some of these mega cap tech stocks can actually lead to outflows in the dollar. So it's probably going to happen around the same time we get a turn in the dollar. So lots of things to think about. I hope I've given you some things to consider, and even some actionable things short term. I think you could buy weakness in the dollar and sell strength in cable and Aussie and precious metals, and see how long you could ride the bucky Bronco. And you could count on, between Michael Venezia and myself, of you being aware of when gold and energy, commodities, my specialty, and Michael will be on to talk about his themes going forward here in 2022 today at, it's going to be in 2.5 hours. So it's at 2 p.m. Eastern time. So be ready for Michael. And I'll be talking to Mike tomorrow. So we're, you hear us individually today on Mondays, and then we join forces, and it's modern math. 1 + 1 = 11 when we talk. So good hunting. I'm, there's only one thing you could control in this business, and that's your risk. You have to know where you're wrong before you enter the market, so you don't start rationalizing a position. I say it because I know it, because I've done it. You have to know when you're wrong prior to initiating the position. We're going to be patient this year. We're going to let the markets come to us this year. We're going to be okay if we miss trades, and we're going to be okay just sitting around and waiting for setups to develop, and there's no hurry. There's going to be multiple trades in the next 1-year period, and it's my job to give you some ideas as to how you could enter it, take advantage of it, and protect yourself at the same time. You have to assume risk. And here's another thing. I want everyone to take a look in the mirror and say, with what I have in my account, is that truly risk capital? If it disappeared tomorrow, would I be okay? Would my family be okay? So only trade with equity that you're not going to be very emotional with. And if you need it, you shouldn't trade it. Okay, that's my belief, because you're going to be emotional. It's emotional enough, but trading with scared money is kind of a formula for unhappy times. So trade with risk capital only. There's going to be some big themes playing out this year. We'll see what happens with things like DBA, which is an ETF for agricultural commodities. Shy Girls talked about them. I still think I'm going to be able to buy a lot of things cheaper, like the euro and gold, and even commodities on this last push up in the dollar should pressure the commodity markets. But I'd be looking for entries on the long side of the agricultural space as well. So as always, remember, don't just count your pips, count your blessings. We'll have a full market tomorrow when the banks reopen, and stay tuned for Michael Venezia in 2 hours and 10 minutes, and I'll see you all tomorrow with Mike. Adios. And again, let's say one more time, 2022 is going to be a great year. I'll see you tomorrow.